Well, the end of 2021 is finally on the horizon. Hi, I'm Matthew Carr, Chief Trend Strategist at the Oxford Club. Thank you for watching this episode of Market Trends. If you're new here, be sure to hit that subscribe button and turn on notifications so you never miss out on my best trading ideas, which I share here each and every week. Speaking of that, it's been another year in the books for us here at Market Trends. In 2021, we covered everything from cannabis and cryptocurrencies to semiconductors, reopening trades, and leaps. We even talked about Pickle Rick at one point. I highlighted more than 50 opportunities that I liked and I thought investors should take a look at, and wore dozens and dozens of different times. As the end of the year draws to a close, we'll do it like we normally do. Let's look back at some of my worst and best calls of 2021. So let's start with the bad news first. Where did I just get it completely wrong? The headliner, I'd say, was I was certain we'd see some move forward on cannabis legalization at the federal level here in the United States. You know, it kind of seemed like there was a lot of momentum. The Democrats controlled both houses of Congress, and at the least, I was sure something like the Safe Banking Act, which is all about allowing cannabis companies to have access to the financial services every other industry enjoys, would pass. Of course, that didn't happen. And it was kind of frustrating because we're talking about companies like Curaleaf, which is reporting $1 billion in annual revenue, that just don't have access to the same banking services and markets every other company in the country does. Right? So this lack of movement weighed on cannabis from Curaleaf to Crisco, which was my number one cannabis stock for 2021. Green Thumb, Trulieve, Planet 13, Grow Generation, the MSOS ETF, which is all of the U.S. multi-state operators, and of course so much more. So that to me was my biggest whiff of the year. Now, my second biggest missed call takes us all the way back to February 19th and a company called Electromechanica Vehicles Corp. Now, I stated then that with the EV makers Solo, like the single seat car hitting showrooms, we're about to see a major change in fortunes for Electromechanica. That also did not happen. It was a very rough year for a lot of players in the EV space that weren't named Tesla. Now, my third biggest whiff came from a company I've covered for a decade. Boston Beer. That's the maker of Sam Adams and Truly. This is a company that I've scored some record gains for the Oxford Club with. But on July 2nd, as beer drinking season was getting underway here in the United States, I forecast that Boston Beer shares would hit $1,300 by August, and that at the time, the September $1,070 calls looked attractive. Kind of seemed like a no-brainer. The consensus price target at the time was $1,800. The trend that we had on our side all pointed that this should be a big beat. Now, the brewer completely cratered on second quarter earnings as Truly sales struggled. So you can see here that Sam Adams shares completely tanked. Those calls expired, were worthless, or would be severely hit if you had bought them. Now, no one bats 1,000. But those are the three rejections I made this year that I felt I really got absolutely wrong, that really sort of bugged me. You can throw things in there like, I thought a lot of the Chinese volatility, the Chinese stock volatility that we saw mid-summer would go away. Obviously that has returned too. But those three right there were the ones that really stood out to me and really kind of bugged me. Now, with that out of the way, what did I get right? Well, the more than 50 opportunities I highlighted this year here at Market Trends returned average peak gains of 25.5%. That's not too shabby. That's not as great as we did in 2020, but still a very strong year. Though the ones that performed the best this year were all related to one sector, and that was cryptocurrencies. I've talked about Bitcoin and cryptos for years, and back on May 28th, after that first real sell-off in the sector in 2021, I advised that here's an opportunity to focus on Bitcoin, Ethereum, and Litecoin, these stable coins, with Bitcoin trading around $30,000. To me at that time, that looked like a nice, attractive, entry point. And from that point, Bitcoin and Ethereum soared to new all-time highs by November 10th, doubling from where they were on May 28th. A week later, on June 4th, I talked about the chip maker NVIDIA. Now, the company's business was booming. A lot of the graphic cards, a lot of the semiconductors have been doing well. And its business continues to perform well. Plus, it has its dedicated CMP line, which is just for miners. On top of that, at that time, it had a 4-for-1 split on the horizon. And I showed in that video how stocks that split outperformed the market over the next year. So that was another nice opportunity that we highlighted that had a potential for some really nice gains. And finally, the biggest short-term sort of opportunity that we highlighted also had to do in the crypto space, and it comes from November 10th. I said, I'm a fan of Bitcoin and cryptos. I think the potential for Bitcoin to hit new all-time highs in 2021 is still a very real possibility. And if you don't want to open digital wallets, I also like exposure to the market through miners like Marathon Digital and even the Grayscale Bitcoin Trust, which is trading at a discount to Bitcoin. Now, Bitcoin hit new all-time highs a month later after that video. Again, just shy of my $75,000 price target for the year. And shares of Marathon Digital rose to a peak gain of 133% by November 29th. We're closing the books on 2021, but looking ahead to the next year and have plenty of opportunities that I'll be sharing here each and every week. Well, I'm Matthew Carr, Chief Trend Strategist for the Oxford Club. Thank you for watching this episode of Market Trends. And as always, be sure to go down to the description and sign up for my free e-letter. Until next time, until next year, here's the high returns.